Let me get started with all this volatility across markets worldwide. Would you advise investors to get in amid this volatility, and how can they protect themselves?
Well, yes, I would say use the volatility to and pullbacks in the market to put some money into the markets. I think nobody can be 100% sure where exactly the markets are headed in the short term. But we are still medium-term positive in equity markets. Evaluations we don't think are in bubble territory. There's enough liquidity. Economic growth is healthy enough, we think. And so, volatility creates that opportunity. So I think what you want to do to protect your downside is really to spread your investments over the next 6 to 9 months, because we've got a lot of things happening over the next 6 to 9 months. You've got focus on China, plus, of course, the Federal Reserve meeting, which I think is going to be quite an important decision maker on where the markets are headed.
So where does this time diversification strategy that you're just advocating hold strong? Which markets and sectors would you look at?
Well, the regions that we like are really Europe and Japan. The Europeans are still on QE. In fact, Draghi just announced overnight, a slight step up in QE. I think Japan is also adopting very accommodative monetary policy. We are seeing earnings, starting to improve in both these markets. Corporate governance is improving in Japan as well. So I think overall, we are more positive on the developed markets compared to the emerging markets. And within the developed market space, we are more positive on Europe and Japan. And we think that, these are the markets that investors can, focus on over the next perhaps 6 to 9 months.
Yes, but in Japan, we are seeing foreign funds just pull money out of the country the most in more than a decade. This seems to me, it looks like profit taking at the moment. Would you still tell investors to get in right now?
Well, I think it's very difficult to time the market. Yes, there was foreign money getting out of the Japanese stock market, and that's partly because, the yen strengthened on the back of risk aversion. But, I think that kind of pullback creates an opportunity for investors to, put some money into the Japanese stock market. We're not talking about where the markets are headed over the next 2 weeks, 3 weeks, or even next couple of months. We're talking about the next year to two. And on that time frame, we're still very positive in Japan. And we would see pullbacks in Japanese stock market as an opportunity to start accumulating.
I know you like advanced markets more than you do underdeveloped ones, but back in July, you thought that Chinese authorities were willing and determined to support the markets. With what you've seen in the past month, would you still go with that opinion?
I think so. China is a centrally commanded economy. It doesn't operate like, the Western world. And, China has a lot of tools still to defend its economy. And, to some extent, the stock market as well. Reserve requirement ratio in China is still very high. They have room to cut interest rates. They've got $3.7 trillion in reserves. And they could, help to weaken the currency further, and that could help the Chinese economy. So they can still do quite a lot more in terms of, protecting the downside for the Chinese economy. And I think they will. They will not want to see the economy going to a crash landing. We don't see that as a central scenario. We think that, the economy is headed for slowdown, and China has the means to engineer a soft landing.
Now, South Korea, as I mentioned earlier, just formed a death cross, that bearish indicator that forecasts a drop in prices. Would you still get into the market there?
Well, South Korea, we don't track it as closely, but, South Korea is very closely linked to what's happening in China. So with the slowdown in China, possible further weakness in the Chinese currency, I think, you want to be a bit careful about Asian markets. We are generally careful about Asian markets. We think that the Asian markets could see further downside. The Federal Reserve has not started increasing interest rates. When they do, we could see another round of capital outflows from Asia. And South Korea is a market which has a lot of foreign participation, and it could see more outflows.
What about Australia? Because the economy there seems to be a bit sluggish, but we are seeing we are seeing this rout in commodities prices as well. But could there be some upside for, say, stocks of precious metals? I'm hearing that there could be some significant gains there in the future.
Well, we're not positive. We're actually quite negative on precious metals. We're still quite negative on the commodity sector, and that's a space that Australia is, quite exposed to. We find it difficult to be positive in the commodity sector at this juncture. If the Federal Reserve pushes up interest rates, the US dollar is probably headed higher, and historically there's been a negative correlation between the US dollar and commodity prices. The slowdown in China is also another factor that weighs in commodities, so it's hard to be positive in the commodity sector, and in that respect, I think there are better opportunities outside of Australia.